Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated, if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have my friend Ryan Miller. Ryan is a finance professional with over 15 years of experience, which spans from CFO of insurance companies, corporate development for energy companies, and management of a $250 million portfolio of technology projects. Currently, Ryan is the founder and CEO of Pentium Capital Partners, which is a private investment group. Thanks for joining us, Ryan. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah, thanks for having me. And I got to say, what a phenomenal show. This community is absolutely brilliant. And so with a real estate background and learning everything in real estate and capital raising and all the things that you've done for your community, I just want to give props to that. Huge fan. I'm very excited to be on the show. So to answer your question, Gary, yeah, a little bit about me. So I, like many of you listening, I grew up in let's say an environment that there was no silver spoon in my mouth. And looking around at a young age, I was wondering, seeing things that you see in rough neighborhoods, how do I not grow up here? And maybe some of you are wondering that right now, and maybe you're not kids, you're adults and you want to get out. And, you know, the gray in my beard tells me I'm old enough to remember these old Wall Street movies. And so as a kid at 12 years old, all I knew was there's this magical fairyland called Wall Street that makes you drive a Porsche and marry a beautiful wife. And so I thought at 12 years old, I'm very young and simple minded. I thought, well, whatever this Wall Street thing is, that seems to serve up the life. That's my ticket out of here, is just getting investment and finance and all of these things. And we'll get into that. And so at 12 years old, I set out and I took it serious and I hit the books. First one in my family to go to college, and I got into the number one accounting school in the world, and I thought they made a mistake. Maybe some of you listening right now have done things that are almost way out of your league, or it feels that way. I promise you, the best of us still have imposter syndrome. You're going to be fine. And so I studied and I gave up all parties and all of these things that you're supposed to do as a young guy. But I was a good boy and just kept studying and studying. And I was like, I'm going to be the one that makes it, right? You ever think like that? I know I have. And I studied my butt off and graduated with very good grades. And I got my dream job in New York City on Wall Street in 2008. Literally the worst year to try to launch a career. Now, given that I'm not American, not only did that dream of mine that I had since I was 12 slip through my fingers in a matter of what felt like 5 minutes, I'm not American. And so no job, no visa. So yes, some people do follow immigration laws and, you know, a deal's a deal. And so I left the country and moved back home to the place I swore I would never return. But don't worry, Gary, it wasn't a total mess. At least I had $100,000 of student loans to pay off. So here I am. And maybe some of you listening right now are wondering in tough moments where you're like, what am I going to do? And it feels like you've lost everything, or a deal went sideways, or maybe just didn't work. If that's you, you can relate. And so here I am right back in this place wondering, what am I going to do? And what I decided is this next decision I'll describe is probably the only reason why I'm even able to talk to you, which was I refuse to believe that I've lost everything. I'm not going to lay down and die. And so I'm going to treat this like a deal that kind of worked, but mostly didn't. What would I do? And remember, I barely had any experience, but I had the fire. And I realized I'm going to treat this like a deal that kind of worked, mostly didn't. And in that case, I would just rebuild off of the scraps. And so the question is, and I would challenge if any of you can relate to this story, ask yourself this. Well, what do I have left? And I mean, not in despair, but truly you are searching and refuse to believe that you've lost everything. And I realized in that moment, Gary, that I had the two most valuable assets all successful fund managers have, which is your reputation and your relationships. And so I levered those and I started a little consulting business. Kids these days call it a side hustle. It was a recession, man. I was trying to eat. And I would consult and just help people to get their financials for startups, and they would pay me in equity. And so they'd pay me $20,000, $30,000 in equity, and in venture, that's a lot. And over 4, 5, 6 years, that would turn into $1 million, $2 million bucks. And that's how I built my first venture capital portfolio. And I've never looked back.
I love it. That's an awesome story. Thank you for sharing that. Whenever you start anything, it doesn't go perfectly. Even when you've been doing it in 50 years, it doesn't go perfectly. And so it's like picking yourself up, staying positive and just getting back to work is amazing.
Yeah. Yeah.
So you've been extremely successful raising capital. So talk about someone who's just starting out. Like, what are the best practices to start being able to raise capital?
Yeah, everybody starts, right? The journey of 1,000 miles begins with the first step or something like that. I don't know who said it, but it sounds smart. So I would say raising capital when you're starting out, it's really important. It's like starting a new relationship. It's exciting. You're a little nervous. Anything can happen. So how do I handle this well? Well, I would say the important thing, the overall objective when you begin is to say, how do I do this so that eventually money and deals come to me? So when it's inbound, it's so much better, but that doesn't happen overnight. And so I alluded, Gary, before to reputation, relationships, and I've added a third R, which is results. And so this is the trifecta that I follow: reputation, relationships, and results. And optimizing those, it now becomes an asset that you can use to raise capital. And so the thing to consider is long game and short game strategies that we have in place. And I teach a lot of those to people who I'm fortunate enough to support. But really the first thing, let's really get into it. The first thing that you should do if you're just raising capital for your own deal is you want to build a list of what I call triple F, right? Friends, family, and fools. And I mean that in a lighthearted way. Obviously, we don't call our investors fools, or we don't think that way. But it just means like people that you know, and maybe the goofy friend from college, whatever it is. You're far along in your career, and you start with the people that you know. So literally the first thing that I did is I built a list of 50 people that I would know. So I would challenge, if any of you are listening to this, build your list of 50 people, college roommates, old professors, your mom, doesn't matter. Start there. Start by those: name, address, email, whatever it is, and how much you think you can raise from that. And it just really gives you a little more granularity and clarity on who it is that you need to talk to. That would be the first place: is where am I going to find investors? Solve that problem first.
Yeah, I love that, because I think a lot of people, and when I got started, I didn't build up my list and I was nervous about talking about it. So those are the people that you want to practice with. Get those reps, like anything. And because it's a very comfortable environment, and you'll see what's working, what's not working, how are you resonating. You're fine tuning, not even a pitch, because it shouldn't be a pitch. It should be sharing what you're doing. And that's a great place to start. So then what's next? What is the next stage to finding investors?
Yeah, so finding investors, I think, is the critical thing. And like I mentioned, I've helped a couple thousand people to launch their own funds. Some make it, some don't. And I would say the ones that the deciding factor between all of it, because I've noticed, is when we do deals, whether it's syndications or you're launching a fund or you're an experienced one, often I can tell the people who may be a little bit misguided in their approach of starting is they're so focused on structure of the deal. Now, I'm not saying that doesn't matter. I'm just saying that's maybe step 2 or 3 that you need to get to. Step 1 is, how do I find investors? Because if I don't have any investors, like, what's the point? It's just talk. And so making sure that you have that inflow of capital is paramount, and almost like a company without sales is what an investor like us would experience without investors. And so, in other words, you're not going to be in business for very long if you don't have that. And so the next thing that you want to do after you have that list is really refine your pitch. And like you said, Gary, spot on. You want to put in the reps, because think about it this way. If someone goes out, let's say a professional NFL player, and they go on to win the Super Bowl with their team, do you think they threw a football one time? You think they bench pressed or did squats or whatever they did one time? Of course not. You cannot keep these guys off the field. You can't keep them out of the gym. And even if they're not doing both or watching highlight reels, no matter what, they are fully immersed in this life. That's the level of intensity you need to be. And so when you're starting out, you have to put in the reps if you're going to get the ring. If you want to win that Super Bowl ring and you want to be the champ, it takes a lot of reps. And this is weird, and I'm sure the internet's going to be interneting, but one of the easiest things, if you're like, I don't have any friends, I can't do it, whatever, you can literally practice in the mirror or record yourself like we are right now and really just deliver that pitch. It's important to do friends, family, and fools. And if you don't have too many of those, you literally can do it to your mom, your grandma. I've done it all, and bless their heart, they would listen to it. But putting in the reps, I cannot understate or overstate that enough, is just making sure that you're well practiced. So put in the reps and then hit the pitch deck and hit that with triple F. That's the great place to start. That's what we call short game strategies.
All right. So they've done that. You mentioned meetups, and when I started out, I was going to a lot of meetups. Actually, I met a business partner there. Started my own meetup in downtown LA and in Phoenix eventually. But it's a lot of time, and for what I got out of it wasn't really worth my time. I'm curious your thoughts on that, and what's a better solution than meetups?
Yeah, I love that. So yeah, for those of you, and I'm laughing because I spent so long, regretfully now, but I didn't know. So here's a mistake that a lot of people who are starting out do, is they're saying, I got to find investors, right? Back to the thing I said is, yes, you got to pitch, but above all, you have to be able to know, how do I build a pipeline of what original business would call leads? We would call that investors. How do I make sure, number one, that I have a strong pipeline of investors? Number two, how do I do it in a way that they come to me? So maybe I can walk you through a couple of things that I did, and I can compress a few decades into days so that people don't spend that much time figuring out the hard way what I did. We can just solve it right now. So one of the mistakes that I think a lot of people make, and this isn't a hard, fast rule, but we're just saying statistically, your odds aren't good doing this. So often, many of us who live in large cities around the world will have these local meetup events for investors, or a chamber of commerce, or all of these things that a lot of people like to spend their time on. And I know you'll have, like, say certain accredited investor groups or whatever it is, right? Scrub it of the name. The name is just to get you idea. It's the effect. And the effect you're after is, if I go to an event or if I go out publicly, I want to walk away with some investors that I can contact, or someone who's already committed. Whatever that is, you got to get in the right room. So what's the right room? So if going to local meetups is the wrong room, what's the right one? Well, I kind of stumbled onto this. And you want to be in a room with high net worth individuals who are there to give. Because when you're in a lot of meetup events, and Gary, maybe your experience is different or the same, but what I've found is that these meetup events, the reason why I think they're not effective is because everyone is just as bad as I am. They're all going to get something, right? So now here I am thinking I'm the only one who's there to get, and everybody's going to sign up and give. The answer that I found, and maybe you listening to this, you find other things, is that if everyone's there to take, you're in the wrong room. So the right room you want to get in where everyone's there to give is the boardroom. And so getting on a board of directors or a board of advisors, but some kind of board is effective. And I was on a home builders association board. So I know there's home builders associations. You could do that. And when I did that, I was literally rubbing shoulders with CEOs of billion-dollar land development companies who also have construction companies and real estate. And these are wonderful, and bankers. And this was a huge advocacy group. And we just ran economics. And I was literally in my 20s getting to meet these CEOs. You think they would ever take a meeting with me? Absolutely not. But we were all on the same board. And so we were able to do it. And then I went on to the board of the Philharmonic Orchestra. And I was able to support an orchestra. And literally everybody was a CEO of an oil company. I'm in my late 20s, early 30s hanging out with these people. There's no way I would be in the same boardroom in their office. But because we were all there to give to the symphony or an advocacy group, now we're all there and we're bonded by our generosity. And let me tell you, when you're in a generous state with other generous people, and we all have the capacity to be generous, and when you're doing that with high net worth individuals and you're right there adding value, now you're in a room where people are there to give and you're able to get their number and move that relationship forward. And hopefully you can flip them to invest in some of your deals. And it all started by just getting in the right room.
I love that. So powerful. I hope everyone rewinds it back and listens to that again. Focus on the giving part and you will get plenty in return. And what better way to be a part of something that you're passionate about and finding people that are the best people to support something that you're doing. So really great advice for people. Okay, we're going to go one step further. Okay, you've been doing this for a while. Any last advice for people looking to gain investors or some kind of secret sauce that they should be using?
Yeah, so I have plenty. So so from a final one, I would say there's something that I call the 3 disciplines of capital raisers. So again, we're still in the context of people just starting out, and this is really where my career took off. Is the 3 disciplines are never eat alone, always ask about their story, and be generous. And so the first time I did it, I just finished grad school and I met a guy who was building a 132 megawatt power plant in the area that I'm at. And so I sat down, I took him out for a coffee. So it literally cost me like $4. Anyone can do this. And bought him a coffee and we just sat down and we talked about his project. And so check number 1, never eat alone. Great. Got him. We had a meal, bought him a coffee. So even if you're just starting out and you have no money, take them out for coffee. Then ask about their story. Now, you're not there to hear about their kids. It might come up, and there's nothing wrong with that. But what you're really trying to find out about their story that you're asking about is what deals are they getting in or getting out of? You're trying to find where is the liquidity in this person's circle, and then you insert them yourself into their world by making a generous offer. So one of the things I did is this guy was worth hundreds of millions of dollars. Like he was huge. And we sat down, he's building this power plant. I said, hey, I just finished grad school. I can build you a financial model. This thing will literally be a Picasso. And this will be a work of art. It'll be accurate. And the best part is I won't even charge you. And so by making a generous offer to build a financial model on the deal, which I did for free, then 2 weeks go by, I show up at his office and I find the finance emissary, the Saudi crown prince. There was a billionaire family that's in there. I won't say their name, but they were there. And here I am again at a young age, but because I decided to not eat alone, ask someone about their story and provide value without saying, you got to pay me. Because if he had to pay for a financial model, that check's not coming my way. He would have hired like, say, Deloitte or an investment bank to do it. But because he liked me, I now became that person, like that little fish on the belly of the shark that swims with them, and you get well fed. And so being able to follow those three disciplines is another fantastic way to just start out by meeting people, and who doesn't want to partner up with generous people? Like, so now you've positioned yourself, sometimes we call it a brand or a reputation, as a generous person. And people are like, I'm going to pull you in the next deal. And now he's become a great friend, not only a mentor, but now a friend. And now he calls me for advice on funds and investing. And he's doing some amazing real estate projects. I won't say where, but he's doing wonderful things. So that's one. And then I would say, if you're looking as far as final thoughts, if you're looking for further advice or things, you can email me directly at ryan@fundraisecapital.co, or you can go to fundraisecapital.co. We have all kinds of lessons to teach other people, whatever's right for you. There's literally no pressure, but if you're looking for help in this area, follow Gary, follow anybody, and just make sure that you do your homework and do your due diligence and really learn from people who've been where you're trying to go. As the saying goes, never take advice from people you wouldn't trade places with. So if that's you and you're just looking to level up, I think with Gary's community, you're in a great place. And if I can serve you and take care of you, you now have my contact info.
Ryan, thank you so much for coming on the podcast and sharing your wisdom on raising capital. You mentioned the book, Never Eat Alone. It was written by Keith Ferrazzi, and my old company used to run a music education program for his nonprofit. So I got to hang out with Keith a few times. So small world. And because I never, didn't always eat alone, we connected through a mutual contact. So definitely read that book. Highly recommend. And if you want to learn more about capital raising, definitely check out Ryan's site, launching a capital raising course.
And community.
So yeah, definitely check it out. Thanks again. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.